Today, I will be showing you this amazing strategy that gives a lot of winning signals. This strategy made 66% win rate within a short period of time. It was backtested 200 times. And it is very easy to understand. I recently discovered the strategy as it uses just 3 indicators, which makes it very easy and user-friendly for beginners. I will backtest it 200 times with an initial account size of $1,000 with a 1.5 risk-reward ratio. Please make sure to hit the like button and subscribe, as it really helps the channel. Okay guys, so for today's strategy, we will be looking at the Bitcoin United States dollar tether, and we are on the 5 minutes time frame. For this strategy, we will be using 3 indicators to monitor the market trend, as well as possible entries for our trades. So for this strategy, let's quickly add the indicators to the chart. For the first indicator, add the Williams fractals. This Williams fractal indicator aims to detect reversal points through highs and lows. It's known as being one of the first indicators to use fractals and bring into the trading mainstream. Generally, the indicator is formed by 5 candlesticks, or bars on the price chart, and it's shown with an up or down arrow to signal its high or low status. And now for the second indicator, we will be looking at the MACD by Chris Moody, as this is an extremely popular indicator used in technical analysis. MACD can be used to identify the aspects of a security's overall trend. Most notable, the aspects are momentum, as well as trend direction and duration. And for the last indicator, add the ADX and DI by Backtesting. This indicator is a perfect indicator for detecting when the market is on a trend, and when the market is ranging. So traders, now that we are equipped with the indicators, let's quickly go over the settings and conditions for these indicators. For the MACD, go ahead and double-click on it. On the style, untick the MACD, then untick the signal line. For the histogram, change the color 0 to green and increase its opacity. Change color 1 to pink and increase its opacity. Then for color 2, just increase its opacity. And the color 3, change it to blue and increase the opacity. After that, then untick the cross and click on the OK button, and we would have our MACD looking like this, as we will only be using its histogram to enter our trade. That's why we had to remove all the other scripts we had on the chart. When the histogram is above the 0 line, we are in a bullish trend, and when we have it below the 0 line, we are in a bearish trend. Now the colors of the histogram shows what's currently happening in the market, as green shows more buyers than sellers, while the pink shows possible retracement or reversal from an ongoing bullish trend, whereas having a red histogram which shows more sellers in the market, and the blue indicates a pullback or possible reversal in an ongoing bullish trend. Now let's adjust the settings on our fractals for better visualization and reading. Like we said earlier, this Williams fractal indicator aims to detect reversal points through highs and lows. Go ahead and double-click on the Williams fractals. On the input, we won't be changing anything, but on the output, change the first shapes to green and the second shape to red. When you are done, click on the OK button. And for the last adjustment for this strategy, go ahead and double-click on the ADX and DI. On the style, untick the DI plus and DI minus, then change the ADX to white and click on the OK button. When you are done, we have our chart looking like this. Now let's quickly go over the conditions for our buy and sell signals. Now for a buy trade to be valid, we need to have the MACD histogram above the 0 line as our first confirmation. Then we would wait till we get pink histogram above the 0 line as our second confirmation, and we would be entering trade at the next green histogram if 1. The last fractal on the chart when we got our green histogram is colored in green, and 2. The ADX moving average is above the 20 threshold line. We would then go ahead and open a buy trade at the peak of our triggered candlestick. So here, we see we met all our conditions, as we have the histogram above the 0 line, and we got our pink histogram here. Before we waited for the next green histogram on the MACD, the last available fractal is colored in green, as we still had the ADX above the 20 threshold line. We would then go ahead to open a buy trade at the peak of this candlestick. Our stop loss is at the recent swing low, while our take profit is at 1.3 times the risk, and we see the trade was successful. Exactly the opposite is true for a sell entry. For a sell entry to be valid, we need to have the MACD below the zero line, and we need to see a blue histogram on the MACD before we wait for the next red histogram. Then we would check the point at which the previous fractal closed. If we have a red fractal and our ADX is above a 20 threshold line, then we would place a sell stop at the bottom of the trigger candlestick. So here we see we met our conditions, as our MACD is below the zero line, and we had a blue histogram before we got the red histogram. We can also see that the ADX is above a 20 threshold line, and our last fractal is a red triangle. We would place a sell stop at the bottom of this triggered candlestick, while our take profit is at 1.3 times the risk. We see the trade was successful. Now let's go over some examples, before we head over to backtesting the strategy. So here is a sell trade we would have taken. So we see here that we had our conditions met, as the MACD is below the zero line, and we had our blue histogram before we got our red histogram on the MACD. We can also see our last fractal was red and the ADX is above a 20 threshold line. We would go ahead and place a sell stop order at the bottom of this candlestick. And we can see we had a successful trade. So let's quickly go over one more example before we backtest the strategy. So we can see here that the ADX is doing a great job at eliminating bad signals, as it saved us from these points in the market where the market range occurred. So this is a sell trade we could have avoided. We see we met all our conditions at this point, but the fractal saved us from this losing trade, as the last fractal on the chart is a green triangle, so we could have avoided this trade. Okay traders, let's quickly backtest our strategy, with an account size of $1,000, and we would be covering 200 backtested trades, as we risk 1% of our capital on each trade. Let's quickly dive into it. So we just finished the backtesting for this strategy, and we can see that the results are amazing. We had a win rate of 66% in 200 backtested trades, having won 132 trades and lost 68, which made us 103% return on investment. And I found those wonderful trade setups within 6 months, although commissions and spread fees would eat up some of the profit in real trading, because it was not included in the backtest. So you definitely want to expect that number to be lower when trading live. The profit factor for this strategy is looking good, I guess, and we had 7 wins in a row against 5 losses in a row. So yeah, I'm definitely happy with these results. Okay traders, that's it for today. Thanks for watching, and see you in the next one.